My dear friends, welcome to Rajashekar classes. This is lecture number 95. In this lecture, we will try to understand about fear and greed index. What is this fear and greed index? The fear and greed index is a popular sentiment indicator used in the technical and market analysis of stocks. It helps to gauge the overall mood of investors ranging from extreme fear to extreme greed. This index is often used to identify potential buying and selling opportunities. How it works, let us try to understand. The index is typically measured on a scale from 0 to 100, 0 to 25. What is the 0 to 25? Investors are highly pessimistic and stock may be undervalued. That may be potential buying opportunity. Investors are very pessimistic, which may indicate a buying opportunity. 25 to 50, that is fear. Negative sentiment still dominates, but not at extreme levels. Cautious sentiment, but the market is not in panic. Number 50, that's neutral. Market sentiment is balanced between fear and greed. What is this 50 to 75? It's a greed. Optimism is growing and stocks may be overbought. Investors are optimistic, which may push prices higher. 75 to 100, euphoria is setting in and correction may be near. High euphoria, which can signal an overbought market and possible correction. Factors influencing the fear and greed index. Different versions of the market exist, but the CNN fear and greed index for US stock market is one of the most widely used. It considers the following indicators. First one is stock price momentum, compares the S&P 500 and to its 125-day moving average. Stock price strength, number of stocks hitting 52-week highs versus 52-week lows. Stock price breadth, market breadth based on the volume of the advancing versus declining stocks. Put call ratio, I will discuss what is this put call ratio in future classes. Measures the ratio of bearish means put versus bullish means call option contracts. Market volatility, VX, the CBOE, we already discussed this one. This is CBOE volatility index, reflects the fear in the market. The junk bond demand, investors' appetite for riskier, highly yield bonds. Safe haven demand, compares returns of stocks versus bonds. Bonds means flight to safety, isn't it? I can say how traders use it. I can constrain investing means when fear is high, constrained traders might see it as a buying opportunity. When greed is high, they may consider selling or taking profits. Conforming trends, it extreme greed aligns with strong technical indicators. It may confirm an uptrend. It extreme fear aligns with the breakdowns in support levels. It may confirm further downside risk. Risk management helps traders to assess whether the market is in bubble or extreme greed or in oversold condition, extreme fear. Why it is why is it important means this anybody can understand. It's a market timing sentiment analysis. Limitations, the index is sentiment indicator, not precise buy or sell signal. It can stay in extreme fear or greed territory for an extended period. It can stay in extreme that's what it says, isn't it? The fear and greed index is a popular sentiment indicator that helps investors to gauge the overall emotions of stock market. What I can say, the fear and greed index is useful sentiment indicator for investors, reflecting the overall market mood based on various factors like volatility, momentum, and demand. It helps to identify potential turning points in the market. The fear and greed index is a valuable sentiment indicator that can help investors to understand market psychology and identify potential turning points. While it should not be the sole basis for investment decisions, combining it with fundamental and technical analysis can it can improve market timing and risk management. Just go through this lecture. It's a simple lecture. If there is any difficulty, please keep a comment. Thank you so much.